All right, good morning. Today is August. August. Today is September 7th. September 7th, 2022, and I'm back with another edition of the Wednesday live show. And cross my fingers, but my internet connection is pretty much resolved. Um, my internet provider was like spent 2 weeks, roughly 2 weeks, having problems outside of my, I guess, I don't know what it was, but anyway, so for 2 weeks, internet off on, cutting out in the middle of the day, it's extremely frustrating. But cross my fingers today, everything seems to be fine, and we haven't had an interruption in days now, so I guess they got it resolved. Anyways, it was frustrating there for a couple of weeks, but so trying to remember. Last week, I think everything went okay. It was the week before that I got cut off in the middle of the show, and there was nothing I could do. So, anyway, um, lots going on as usual, and the market itself has been extremely rough the past couple of weeks, and I'm not gonna say it was no surprise, but as as we looked at last week and even the prior week, this whole idea that we got this was this sort of rally right up to the underside of the 200-day moving average, and as you know, it coincided with, whoops, that's not what I wanted. I'm doing something a little bit different here. I decided to experiment and see if I could leave my drawing tools open off the screen so that I could make some attempts to draw on the charts doing the show, like back in the good old days. Anyway, there you go. The most surprising thing, in this whole chart to me was this extra little rally. I guess it wasn't too surprising, but I kind of thought the market would stall out here around this resistance level. Back here, I thought we'd stall out, pull back a little bit towards the 50-day. So it's a 200-day moving average. There's your 50-day moving average, which you can see we're below now. Um, this was a tremendous rally, quite frankly. These lows were back in mid-June, and so the lower end of the range. Actually, here's a funny thing: is I've heard a couple people mention. I think I heard someone mention on. I heard someone on CNBC this morning say that we're in a trading range, and I was looking at the chart and I was trying to figure out what she meant by that, right? A trading range, because um, to me a trading range is like, you pull up IWM, right? Russell 2000, see if I can do this here. So to me, that's a trading range right there. I mean, it was kind of, and we looked at that. You guys remember last year, and we looked at that multiple times. And so that looks like a trading range right there. When I go to the S&P, when I go to the S&P here, it's very difficult for me to define a trading range. I mean, like what is she talking about? It's what I'm trying to figure out. Is that the trading range? I mean, geez, from even if you went like that, even if you called that a trading range, I mean, I'm not sure that you can call that a trade. I suppose you can, you take a highs and lows or whatever, but that's a humongous trading range right there. What, around 3,700 to 4,300. So I wouldn't necessarily call that a trading range. It's too big. With that said, it's the market could easily stay within that range for a long period of time, right? But I mean, this move here, So let's see, I have to use the crosshairs to do this. So, call it 36, 36.30, 32, I guess it is, roughly. Actually, I can get the low on that. That low right there was 36.36. Well, geez, that's easy to remember. On 6/17, that's the low of the year, 36.36. And then the high up here is 43.25. So that's a big range there for the S&P. Percentage-wise, I'm not going to calculate it, but percentage-wise, it's humongous. And so, I suppose you could say that, we're in a trading range between that low and the recent high. What's kind of interesting about where we are right now, there's a few interesting things about it. One is, if I go to I really like to look at weekly charts a lot. And I know that, since I do the show on Wednesdays here, that, it's kind of, hey, it's tough to look at a weekly chart until the week's close. It's not tough to, but it's not as relevant enough until the week is over. But what you can see on the weekly chart here is um, that big run up and that reversal week right there with the follow through is very, reminiscent of what happened back in March, where we had we had the first sort of big rally, and it was even more pronounced this time, I believe. And so, I mean, you can like squint your eyes, and that reversal was pretty easy to identify and notice. And the fact that, there's the 50, that's be the 50-week moving average, which I guess is very similar to the 200-day moving average. But the fact that they rallied it up to the 200-day moving average from underneath, and then, I mean, immediately got rejected, right? I believe on the SPY, the SPX and SPY look a little bit different. So the SPY kind of poked above it, and but the fact that the actual index literally hit it to the tick and then reversed. And of course, everything is sort of based on what the Fed's doing, right? That's the number one, in theory, what the Fed is up to is the number one concern for the market. And the funny thing is that, they have all these Fed speakers that come out and tell you what they're gonna be aggressive, right? I mean, they say they're gonna be aggressive, and so a couple of times on this chart, several times on this chart actually, things were kind of going along okay, and then Powell said something that torpedoed the market, right? And it might have, I think over here, I think back in April, this big long range day down here, I believe was Powell, right? Maybe one of these days over here. I mean, I forget. I don't really keep track of it, but I'm pretty sure that at least three times in recent months here that and the funny thing is the other Fed speakers come out. The reason I mention this is there's like six Fed talking heads this week. I think we've already had one or two, and there's more tomorrow and then more Friday. And so they keep threatening to raise interest. I mean, their plan is to raise interest rates another 50 to 75 in September, which I actually wrote it on my calendar this time, I think. Yeah, Fed Day is 2 weeks from today, Wednesday the 21st. And so I get up this morning and the there's an 80%, market's pricing in an 80% chance of a 75 basis point rate hike on top of the previous rate hikes that we've had. And they keep saying that they're bound and determined to keep raising rates and hold them there until inflation comes down, and they need to see, definitive proof of inflation coming down, which is going to take some time. And so, yeah, interest rates are going up, and it seems to be sort of wreaking havoc around the world and in a whole bunch of different places. I'm sure you've probably seen these charts of mortgage rates. Mortgage rates have gone up when the Fed raises the rates, mortgage rates go up, right? And that has resulted in the monthly payment on mortgages essentially doubling. And so that's kind of the big, that's the thing that kind of concerns me a little bit. Now on the other hand, the price of oil, amazingly enough, I spent all weekend reading about, energy crisis in Europe, shortage of energy, power power shortages, California, having grid problems, all this. And so, I mean, energy shortages were the big topic of the weekend. And then meanwhile, the price of oil has been coming down, which is sort of typical. But I mean, here's the thing: oil under $100 is, I guess, is a good thing. So look at 86 something here. This is, and I'm sure this is delayed, right? See, CNBC will show me the price of oil. 83. Wow, oil's down 3.8% to $83. So it's actually broken down below this level here. Huh, interesting. Um, yeah, and so the energy stocks are feeling that, unfortunately, because we have a couple open trades in energy stocks, and there's certain days where they're disconnected from the price of oil, and regardless of what the price of oil does, they should still, it's kind of the cleanest shirt in the dirty laundry. But the good news here is that the price of oil coming down has a good chance of, I mean, that'll filter out in the economy and help lower inflation, right? I mean, back over here in the spring, I was talking about anyways, how, it's obvious, goes without saying, that extremely high prices at the gas pumps are one of the top contributors to inflation, because, everything out there in the real economy gets delivered by truck. And so things are looking up in that respect. Has inflation peaked? Well, it's tough to say. It really is tough to say. And I should have brought my inflation chart here. But anyway, as far as the market goes, it's been a nasty few weeks here. It really has. And some of I gotta tell you, I was looking around like AMD, like some of these stocks that were just darlings, right? Just absolute darlings. Semiconductors in particular. It's just amazing to see that they've been sort of obliterated, right? I mean, AMD is one of those stocks where you never really expected it to lose half its value, and Nvidia too. I mean, Nvidia has been one of the Wall Street darlings. It's been, tremendous stock for many years. Probably one of the favorite semiconductor stocks out there. And I mean, you look at this. The funny thing is, there's so many stocks that I think we were looking at Snap last week and talking about how this is very reminiscent of the dot-com bubble and bust of 2000, the year 22 years ago. This is what happened to the Nasdaq. Basically, just ran up and then just gave it all back, right? And so, hey, when I look around at these, and I see lots of these. I mean, there's a lot of IPOs and formerly high flyers and that made these kind of round trips, and you just wonder about, if who's holding who, if anybody, is holding these, because I swear I saw somebody on TV. It was either a couple of days ago or last week, and we just had the Labor Day holiday, so it was probably last week. But there's some talking head on CNBC, and of course I didn't listen to it because I have it with me, have the TV muted. But he's on there talking. They're on there talking about Snap, and I'm thinking to myself, and I mean, hey, maybe Snap's he liked the stock at 10 something, but you kind of wonder if somebody like that's coming on there talking their book because they would love for it to get back to wherever their cost basis is on this thing. And so there's just, there's lots of weird stuff going on here. Coinbase, another one that comes to mind. I mean, so much hype surrounding this, as you recall. So, last year was unusual with all the SPACs and tons of IPOs and all that type of thing. And some of these stocks are insane. I mean, look at this. Even this recent price action is crazy. This thing went from $50 to, 110 or something, 120, and then back down to in the 60s. Let's see, another one, Robinhood. Robinhood was another IPO that tons and tons and tons of hype surrounding it, and now it just seems to be bottoming out here around $10. There was that one, right? This would be a good time to bring this up. So remember, like, this Shopify, right? I looked at this chart a few times on the show back over here and said, hey, this thing looks kind of like a bottoming pattern, right? And it did. It looked like one of those sort of, well, speaking of a range, right? Yeah, there you go. This thing was trading in a legitimate range here. That's what I call trading in a range. And then over here, let me extend that out. Basically, the funny thing about this is that it really looked like it was gonna bust out over here. And this may have been earnings or whatever. Like it started poking out of the upper end of the range here, and then I guess, and I'm not sure if this, but usually when you see some outlier like this, that's earnings. But look at that. I mean, broke out of the range and then right back into it, and that's kind of what the Russell 2000 did last year. It broke out of the range to the upside and then went back into it and broke down. So that to me is a trading range. And of course, here it is. It's breaking through the bottom of the range. So I don't know, but anyway, yeah, it's a mess out there. Let's see. Look at some of the. I do want to. Let me see what I can do about this. I think I've screwed my chart up here. Oh yeah, there we go. I knew that was going to happen. Well, that didn't work either. Yeah, so like I said at the beginning here, I've been kind of working with trying to get it to where I can mark up different mark up the charts with different things live on the show, and so kind of fouled everything up, because what's basically happens. Let me go back to. Maybe that'll help. Well, that's yeah, there we go. Daily chart with my big major trend lines here, and so there you have it. And of course, these trend lines tend to shift a little bit, but what I wanted was, there we go, this chart. That's my old standard go-to chart. So there's a lot of people saying that, hey, market's oversold, and it is to some degree, but at the same time, well, maybe that wasn't the best way to do that. Let me try something different here. I wanted to look at the RSI. There we go. That's the better way to do it, to pull it up. So yeah, that RSI is starting to get into sort of oversold territory, but it's not there yet. More interesting more interesting is this little foray here above 70, and literally the peak of that coincides with the peak itself in the market right here, right? And I mean, everybody that learns about technical analysis knows that when the market is trading under the 200-day moving average and the 200-day moving average is sloping down, that's not a good sign. And then it's going to act as overhead resistance, right? So got some interesting stuff going. I mean, as far as the moving averages go, you've got the 50-day and the 200-day, and trading below both of them. I think, well, I don't think, I'm pretty sure that like right about over here, the sentiment really, really shifted. This last little leg here, these last few days, when we were poking up at that 200-day moving average, I believe that, the conventional wisdom was that the bottom was in. The lows were definitely in. People were thinking, phew, it's been a rough year, but we're back in business now. All is good, and kind of ignoring all the macro type stuff. See, it's the macro picture that makes me nervous, makes everybody else nervous, and the people that are looking at, what's going on with interest rates, the fact that the dollar's like, you see all these stats now, the dollar's hitting highs it hasn't hit, against other currencies. So there's like currency craziness out there. There's interest rates are the highest in a long time. Inflation, if you just average out the inflation. So, I mean, that last inflation print went from 9.3 to 8.5, and everybody was cheering, the fact that it ticked down a little bit, but quite frankly, I mean, 8.5 percent annual rate of inflation is insane, right? I remember a long time ago Powell saying that 5% inflation was unacceptable, right? And so it's got a long way to go. What I was talking about last week, when I think at the tail end of the show, was the idea that a lot of these macro type things, especially raises in interest rates, they take a long time to sort of filter the effects, to filter through the economy. Remember I talked about throwing a pebble in a lake. It's the outer waves. They take a while to sort of have an effect on things, and so basically, it's kind of the same thing with the price of oil too. Typically, I believe from what I've read in the past, and I mean, over the years, is that when the price of oil, goes up or comes down, it's a slow, gradual process that filters through the economy over time, and I'm talking like months, and they say that Fed interest rate hikes, Fed rate hikes or rate cuts or whatever can take 6 months to filter through the economy. And so we've had all these rate hikes this year, significant ones, and then we have another one coming. And so, geez, looking down the road, I mean, we're talking about the effects that aren't really going to be known until I would say, next year, the first quarter of next year, we're gonna see what's going on. And of course, there's all these problems in Europe with the Russian gas. It's a whole nother, macro sort of dark cloud hanging over everything, is war in Ukraine, right? That's a big deal. And and all this other stuff with food prices and fertilizer and price of gas and the price of electricity in Europe. I mean, everywhere you look, high interest rates. Everywhere you look, the macro picture is pretty bleak, and the Fed. Is I said this a long time ago, is that the really the only tool the Fed has to fight inflation is is just raising interest rates to slow down the economy. And so Powell even said in he said that there was going to be pain, and so it was basically, when this market started to realize that, hey, things aren't necessarily as rosy as maybe people thought, right around here. And it's funny how the technicals very often line up with the fundamentals, right? And over the years I've seen this so many times that everything's going along just great and the market's rallying, and things seem fine, and then right at a technical inflection point, then all of a sudden, some sort of news comes out or something, something shifts. And it's quite frankly, it's uncanny how they tend to the sentiment tends to get stretched in one direction or the other, and then right at sort of a certain technical inflection point, things shift a little bit. So, um, you know, I'm not going to draw Fibonacci on here or anything, but this pullback that we're seeing here, for some reason, 3,900 seems to be a pretty big level here, right? And I've seen, and it really is, because I mean it goes all the way back to here, and so kind of this area, whatever that is right there. It's well, I suppose I could turn this on and see. So call it 3950 because of like right over here. So 3950 to down here to say 3850 roughly. I'm just making it easy. So I mean that could, that's theoretically like the kind of the midpoint of this range here, right? And so like if I did draw a fib on here, and we're somewhere hovering right around the middle of, from the lows to these recent highs. I'm almost positive that this recent sell down here really caught a lot of people by surprise because of the speed and severity. I believe as of yesterday, this was about 9.2%. So, and as of right now, I mean, you could just call it 9%. So the way that you or that I measure that anyway, it's pretty easy on these stock charts. It's actually kind of cool, right? So there you go. I just put it on performance, and then I put it up at that high, and there you go. And so you can see, and we're talking like couple of weeks, 14, well actually a few weeks, 14 trading days, 15 trading days. Got the little holiday in here. So down 9% in, not quite a straight line. There was a couple of up days, but not many. So that's kind of interesting. Anyway, lots of Fed speakers. The market's kind of, that move down. Wouldn't surprise me to see a little bit of stabilizing and maybe rallying here. So, and you can see it's kind of made that round trip. So 3,900 is actually kind of an important level, and so we may actually see a little bit of rallying here, the next couple of days or whatever. But it still sort of feels like, I'm not going to say this is a holiday week, but typically every year, as far as I can remember, July and particularly August are really kind of lousy trading months. People are on vacation, the participation's low, the volume tends to be low, the big institutions are not doing their thing or whatever, and so summer months, and especially August. I mean, this August was a little bit I wouldn't say better trading environment, but there was a little more action, I should say. It seems like there was a little bit more involvement, but typically August is just so dull. You're better off doing something else, right? And then every year, we always say things will pick up after Labor Day, but typically there's a lag of, say a week, couple of weeks into September. and then the action starts. And so I kind of feel like we're still at that same point right here. Big thing on CNBC now is, asking everybody, have we seen the lows? And that's the huge debate, right? Um, that's the huge debate. Have we seen the lows? And I mean, quite frankly, I don't know. I really don't know, but I will say this. Um, I will say this, you got to step back and sort of look at the bigger picture. Quite frankly, and I know it's a crazy time to look at the monthly chart, but I spent a lot of time looking at this monthly chart because, just last weekend because this monthly candle here, and so you can look and see. I mean, we're only at the 7th right here, and so we got a really narrow range month, and it's going to be interesting to see, how this sort of plays out. We had 2 down months to start the year, and then it was up, down, flat, down, up, down, and so it's like every other month is the opposite. When you look at this monthly chart here, you're not really. It's the parabolic run up that tends to, the thing about parabolic run ups, but I'm going back way too far here, but the thing about, the steeper the sort of parabolic run up, the worse it is once you cross the summit of the mountain range. So have we seen the lows? I don't think that, I wouldn't bet on that, put it that way. I'd be kind of surprised to see those. I'd be surprised to see those lows give way unless there was some sort of macro black swan type thing that appeared out of nowhere. But I'm still not. Let me find my regular. There it is. My regular chart again here. Yeah, I mean we're not that far from the area of the lows, a couple hundred points, right? I mean we've just pulled back 400 points in 14, 15 days on the S&P, and so these lows are less than 300 points away. So maybe the market will stabilize around here. Maybe we get a rally up, test the underside of that, but this is, I'm not sure that this is the dip to buy right here, quite frankly. I mean, just looking at this chart, I mean, there's nothing about this that would make you want to be an aggressive buyer at this point. And as I pointed out, all that macro stuff hanging out there, is going to be a drag. So this year, I've said this a few times, that this kind of reminds me of 2018 a little bit. 2018, there's a couple things about 2018 that it reminds me of, but 2018 started off with a big rally in January, as I recall, but a lot of the same stuff that was happening. The Fed was raising rates, and then that sort of caused a calamity towards the end of the year, and then as you recall, the market sort of tanked into the end of the year. Right, I think it was like Christmas Eve or something. I'm not going to bother going back and pulling all that up, but look at the chart of 2018 and what sort of transpired in the second half, and I just remember that the very end of the year, and a lot of the macro stuff that was going on then was similar to, a few things were similar to what's happening now. But so I kind of keep that in mind because there's a lot of, well, I don't say a lot, but I see the usual suspects saying that, that they're optimistic that the market's going to rally back to the highs by the end of the year or whatever. And I just, I'm a lot more cautious than that just based on the price action. And so quite frankly, draw that trend line. There's all that overhead resistance. The funny thing is, way back, way back, when I had this trend line, obviously I had some other trend lines on here too, right? Like we would, we'd have a trend line here, and there's plenty of trend lines that you could draw on this chart in different places, and so, that's perhaps why there was a lot of buying, at this level, because I think a lot of people, you had the sort of W pattern, and so this back above the 50-day here. So there was a lot of positive sort of technical signals here, and quite frankly, it was pretty surprising they were able to run it up to this, the big kahuna major trend line, but the fact that it got rejected there, and so what you have here is, lower highs, lower lows, lower highs, and so far we haven't seen a lower low. And so, at some point, in theory, let me get rid of that one. In theory, and this is something else I've been looking at here, you draw this trend line and across these lows, which is, pretty valid at this point. And so I think the market's sort of trying to hold that right now. And so in theory, you got like this big triangle here, right? Let me see if I can extend that out a little bit. There we go. And if I had this on a candlestick chart, I could draw it a little bit different and cut off those wicks or whatever. But so there you go. I've seen this is a pretty decent, bigger picture triangle. And of course, we're at the bottom end of the range now, so you might expect to see a little bit of support here. The funny thing is, like today, we're kind of rallying a little bit, and so without looking at the chart, you really have no perspective. That's what kills me. These people on TV that I see interviewed or whatever, it's like, they look at like, what the market's doing right now today and sort of, base their optimism or pessimism on that. The sentiment is insane when you get into these sorts of environments like we're in now. The sentiment just sort of flips on a dime. But anyway, this is kind of important here, because the market needs to hold a little bit here and maybe bounce up, and that wouldn't surprise me if this gives way, eventually, unless it's going to come back down and and retest those lows or whatever. Eventually, what you kind of look for is a solid sort of base and or a reversal, and then. But this is all we got to go by right now. So, and I think that's kind of why we're seeing some strength here initially today, because like I said, the market just dropped 9%. Pretty much in a straight line over the last few weeks, and so it's going to try and stabilize right here. And you hear a lot about 3,900 being a big level, roughly, and which I'm not sure exactly why I'm it's close enough. There's a lot of points in the past where 3,900 was sort of an important level, and so I think it is now. So anyway, we'll see what kind of bounce we get here. We'll see what happens going forward, but I would not be I would, bigger picture, longer term, I don't think this is the buying opportunity yet. There's no signs on this chart that, that anything looks really attractive yet. So, and other than that, geez, we looked at the financials, I think they interviewed someone, there's always we like the financials. Yeah, it kills me. These investment professionals, they always like the financials no matter what. Financials are undervalued, this and that. To me, this is the same sort of thing. It's just a mess, It's down significantly. Let me go back here. It's got this really, humongous sort of rounding top. It's got, consecutive lower highs and lower lows, and it's just barely off the lows or whatever. I mean, there's absolutely nothing about this chart that looks good. And so I remember back in the day, you would always hear, right, financials tend to do well in a rising rate environment, and so I'm just not seeing it, right? Real quick, XLE, energy, nice little cup there, and kind of taking some heat here recently. So this is theoretically, it's kind of looks like it's breaking down a little bit here from that channel, but still, that's a pretty reasonable pattern there, and this could just turn into like a little cup and handle type thing, cup and the handle sort of forming here. So I mean, 200 days sloping up, it's above the 200 day, above the 50 day, and so and I mean, over the weekend I read about OPEC cuts and this and that, and there's an obvious energy shortage. So let's see, technology, we can look at XLK. It's looking nasty, or we can look at the Qs, or I mean, it just looks bad, right? I think the Nasdaq Composites, well, the Nasdaq 100, the Nasdaq Composites down roughly 25% from the highs, right? Maybe 28%. And then of course, last but not least, we'll look at ARK here, which is, as you know, my proxy for the speculative high momentum. Well, this is probably a good proxy for what you could call the speculative stocks, right? And that's a nasty picture there, very nasty, because you can see how close it is to the lows. Speaking of which, there's one last chart I want to look at. Is this Zoom here? Boy, this thing, Zoom was the pandemic darling, right? And every time that I talk about ARK, I think of Zoom because they're sticking by their story that this is going to be a $1,500 stock. They put out a big research paper that I mean, I just glossed over the headlines. I didn't read the whole thing, but this is just basically a poster child of the sort of dot-com mania of 2000. What happened, and I mean, just like I said back at the beginning of the show, same thing happening here. You had these stocks that just went absolutely nuts, parabolic to the upside, and this is what typically happens to things that go parabolic. Right? I mean, they don't always crash like this, but I mean, this stock basically went from where it is now. It's $80 now, and so over here, it was about $80 back in 2020. It went to almost 600, and now it's back at 80, and and so that just goes to show you, and so it kind of makes me think. In a lot of areas, I mean, people are worried about what the market's going to do, but all these individual hype stocks, and I talk about this all the time, but these stocks have already crashed. So I don't know. This was the earnings, I believe. So, and I mean, the crazy thing now is like stocks like this, it was $100, and and then a couple days later it was 80. And so these percentage moves are insane, right? Like look over here, it went from 80 to 120. And so yeah, I guess these stocks are just so volatile, and the lower that they go, I guess we could look towards the Russell 2000 to get an idea of what the speculation feels like, and it looks pretty bad still. So same thing here, big run up, pulled back, gave back about half of it, and we're gonna see if it can stabilize here. Anyway, I think that was my cue. That was my cue to end the show. So thanks for tuning in. I will see you guys back here same